All right, let's just give them a minute or two here. We are on YouTube Live already, so it's
Hey, that's awesome. The show must
yeah.
go on, as the saying goes.
There were a lot of problems earlier today, and I suspect that people have been emailing us. Oh, sorry, I couldn't make it. Is it available somewhere? And thank goodness we're recording. Well, of course we're recording everything. We're in a new era now. It's not as difficult as it seems. But all right, there you are. It's you get your white background. What are you going to put? Are you going to put Hawaii this time? Or are you going to put some sort of
No, just the background here, playing with more solid colors setup. Excited to be on. Took me an extra second there, but
yeah. No, there's a lot of technical difficulties today, but we'll get started. We're on YouTube Live, so let me get it started here for us, and then. All right, good afternoon, everybody, and welcome to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and once again, we are going to have another great discussion regarding all of this talk about regulation crowdfunding, Regulation A, of course, and obviously we're all excited about March 15th, just around the corner. And our presentation is really not listening to PowerPoint, it's really listening to those who do this day in and day out, so you can get a sense of how it's really done. And today we have two great panelists that are going to have a great discussion for us. And for everybody else, just as a reminder, this is available to you on YouTube channel, of course, as well on KoreSummit.io, all the library of all the webinar series that we have. So looking forward to this one. Obviously, we talk a lot about the crowd, but we're going to dive in. But first, let's do the introductions. Obviously, we got some new guests that we haven't had here before. Samson, please introduce yourself.
Hey, how you guys doing? My name is Samson Williams. Today, I'm wearing my Crowdfunding Professionals Association hat. So the CFPA, back in 2012, they helped push through the Jobs Act, Jumpstart Our Businesses and Startups Act, which enabled crowdfunding to really kick off. So in May of 2016, Title III of the Jobs Act came up into existence, which is called RegCF. It's not a very exotic name, but that's what it is called. And that allows for retail investors to invest in early stage startups and businesses. And so I'm going to conclude with this by saying you should definitely join the Crowdfunding Professionals Association. It's a great association for education awareness about crowdfunding. And if you only take one thing away from this entire seminar, know that customers have more money than VCs. I'm going to say this again so you write it down. Customers have more money than VCs. We can even argue that customers have more money than banks, because in theory, banks have their customers' money, but we'll talk about that later.
That was an interesting introduction. I love the hat part. I think I'm not going to forget that one. I don't know, Jason, can you do better than that? I don't know. It's up to you. There you go.
Sure. I can't wait to go sign up for the organization there. Samson, very, very exciting to hear more about what you guys do. And I came out with a Forbes article yesterday called "The New Premium Audience for Investor Marketing," which is user owners. It's speaking to the exact same concept there. I was not familiar with the stat of there being more capital from customers themselves. Really like that. Going to quote you on it actually. Absolutely. And yeah, of course. And not my first Core Connects panel, but just a full overview on me, co-founder, CEO of DNA, Digital Niche Agency out of Los Angeles, California, investor and user acquisition marketing agency. We've been working on Reg D campaigns since 2014, Reg CF campaigns since out of the gate. In 2016, Reg A Plus later that year, over 200 to date, 9 figures of capital. Here to talk with you about marketing strategy, what we do in terms of building a funnel, driving traffic into that funnel with the social platforms, given the topic today. And, with Oscar as the host, I'm sure it's going to be, info and entertainment packed for all audiences.
Well, that is crowdfunding though, isn't it? It has to be part entertainment. Somebody, who is it? Mark Roderick or a few of the lawyers have said that part of crowdfunding and raising capital has to be entertaining. You have to entertain the crowd, and it's important that you don't lose focus of the overall objective. I know everybody swings one way or the other. So today we obviously our subject, social media has been the cornerstone to what everybody feels that it's the key element, the key feature to drive the traffic, to drive the awareness and all that. But we're now learning that social media alone isn't going to do it. And Jason, I'm coming to you because of you've been, I have to give you credit. I mean, you're constantly putting statistics out there to help the industry understand and as well the investor base, that where is it coming from? How do they fit into that whole package? But so let's break it down to why we're saying it's beyond social media. So let's talk about that part. When we say social media, what are we talking about specifically that people just do in social media and then we'll go into the other elements.
Sure. So social media is a very important element. When you look at site traffic online, top sites, social is going to be, at the top of those lists every time. So how do we use these social platforms for a raise? How do we use these social platforms as part of a digital strategy? Are important questions to be asking out of the gate. Now you have organic and you have paid. You have posts, all different types of content that can be distributed and shared and look to get third-party reposting from it. You also have paid, so advertising. I'm a big advertising fan as it's very scalable. If I'm running, let's say $75, $100 worth of ads and seeing a new investor come on board, and it's a $750,000 average investment value, that's a 10x return on ad spend. You look at that at a $10,000, $50,000 budget and the type of capital it's producing, $50K could produce $500K and so on and so forth. Also, as that's happening on the paid side, more organics occurring. If the campaign's running on a portal, the portal's audience is seeing that, and you could see more organic conversions coming in simultaneously. Maybe that $500K then turns into $1 million, $750K. With those audiences that are on looking. So social is a very, very important piece of the puzzle. Whenever we're working on strategy, we like to map out the target audiences and really define where do they go online? Where are these individuals in terms of their day-to-day digital usage? And in doing so, may identify lists of other sites, other apps that we should also have a presence on, be it organic or paid, and exploring where we want to test out first, optimize towards what's working best, and really scale the key drivers from there.
And that's great. That gives everybody a good overview of how social media has been used. And it's like anything else. People think it's the holy grail, but obviously there's more to that. Samson, I mean, I've been watching you. Obviously, you're an advocate of crowdfunding. This is, the Kickstarter model where everybody got started from, thought that it was just one way. Equity brings a different dimension to it, I believe, from the way the investor relates to, but there's some similarities. But it'd be interesting to hear your thoughts on obviously social media is one side, the other elements that a company may need to consider along with that social media element to drive that traffic down their side.
Yeah, Jason, he hit upon it at the onset when he was saying, I tell people, why do you use a product that you're not the owner of? This is basically what it comes down to, particularly when it comes to consumables, whether it's pins or some type of drink. There was a crowdfunding campaign for a company called Dope Coffee, realdoped.coffee. So they only raised $107,000. They only raised $83,000, but they had another like $30,000 worth of sales in the same time, because not only are you raising money, you're also generating revenue. And this is we have some of those interesting conversations with startups and business owners where they explain like, this is what revenue means, this is what income, this is what capital is, this is what profit is. And so this is where when Jason was talking about the future of capital markets, and particularly startup funding, is consumers will have equity stakes in the good products and services that they use. That's super crucial because that changes the game. Because that gives why it changed the game even more so than social media. It gives investors, this gentleman named Woody Neese, he came up with this term investors. And an investor is a customer who is an investor. And so when someone is an investor, it gives them pride of ownership. And so if you walk into my house and you're bringing in some Starbucks, we're going to fight because I don't own any of Starbucks shares. I'm not an early stage investor in the Starbucks. So we only drink dope coffee in my house. So we're going to have to fight. And that doesn't matter what good product or service it is. And this is where, when I started off saying customers have more money than VCs, slightly a dig at venture capital, because the internet and social media is changing how humans can connect. And so we saw this, a really good example was what happened with GameStop and Citadel Capital. A bunch of retail investors online chatting, and they're like, hey, we could actually do this. And I'm going to go on a little bit of a tangent. I'll explain to you. It's only going to be 30 seconds long. In 2008, when all those kids who were part of Occupy Wall Street, they were 20 years old, 18, 20 years old. They went out and made protests. They were occupying squares and whatnot. They grew up because in 2008, this thing, the supercomputer that most of us just use for Twitter and Instagram, it was in its infancy. You have to remember that the App Store, the Apple Store, was maybe 2 years old. 2000, Apple Store came online 2006, 2007. So the social media infrastructure was in its infancy in 2008. Fast forward 12 years, those same kids have grown up. They're like, hey, we've gone through 2 financial crises in our lifetime. We want to have a greater control of what we're investing in. And this is where you have a subreddit group with 2 million people who, because they're now connected through the technology that is social media, they can go out and move a market. They can go out and have the regulators pay attention to short selling as a thing. And this is where social media has really come into its own element, because it's the infrastructure that has been built out. It's the user awareness of people. They just know how to get on Twitter, Instagram, Facebook. There's even a post about MySpace coming back. And so this is where, if you're a business owner and you're thinking, hey, how am I going to engage my community? Well, you need to engage them where they're at. So you need to identify, what platform are most of my users at? There is a subreddit group for Publix subs. If you're in Florida, you've probably been to Publix. It's amazing. That's one of the best subs in the world. There's 32,000 people who talk about the best Publix subs and the varieties and combinations. When you have these affinity groups, social media just allows you to tap into those affinity groups so that you can be part of that community, engage them. And then when you engage them through a regulation crowdfunding, now it's your opportunity as a business owner, as a startup, as an entrepreneur, to tell your story. And I like to say that every dollar tells a story. And if you tell your story well, dollars will come listen to yours. So this is where you take social media, you combine it with your story, where every dollar is going to tell a story. You're going to inspire other dollars to come listen to yours, and you push it out. And so part of it is you do need to use social media. The other part is you just need to tell a good story. And of course, for investors, part of that good story is, what's the ROI? How are we going to make money off of this?
Interesting twist. I wouldn't have brought up the stock one, because we certainly don't want to be providing the illusion that equity crowdfunding. I understand the analogy regarding the crowd. We don't want to step into that one right now because the regulators are monitoring that for a very different reason.
I'll add some context to that.
Yeah,
I'll add some context to that. Is if the behavior of short sellers is illegal or wrong or should be frowned upon, then the behavior of short seller, the ability to engage in short selling, needs to be regulated. The crowdfunding industry is already a heavily regulated industry. I'm in a love affair every week with FINRA or the CFPB or someone from the SEC. If we're going to regulate short selling, that's awesome. We need to regulate it regardless of the income status of the individuals engaging in that behavior. Because when Wall Street does it, no one cares. When the retail folks do it, now all of a sudden everyone cares.
Understood. I mean, this was not meant to be a public company component, because I just want to keep it in context for the audience that we are talking about privately held companies and not public companies. What happened in that scenario, I I'm not going to speak of it because it is in a very different environment. I understand they used a social media component to impact their strategy. For private companies, do not fear. This is not something that would happen to your own star element.
I'm laughing at Jason because Oscar is uncomfortable and Jason is grinning.
Well, it's an uncomfortable subject because I'm a black and white individual. I made the decision in CoreConnex and those who are part of it is that public company belongs over there. That's a different arena. I'm not here to regulate it nor condone it. I do understand the components that are happening. The privates, we have a way of doing something very different. What Jason does is phenomenal. The work that we're helping private companies, that's what we believe in. We believe in that we should need to start separating the two subject matters because as soon as they get convoluted, there will be those who will take advantage of it in the wrong way. And we put an end to those. The industry self-regulates, which is fantastic, right? So we go out and we go out of our way to find those who are going to maliciously hurt the ecosystem. The reason we have the start engines of the world, the WeFunders and the Republics and the 68 others that have now emerged and keeping people like Jason very busy is because we're doing it right. And so that's why I keep that discussion over there, because I believe, my personal belief, what happens over there is let that be there. I like the analogy though. I respect that. I do agree with you. The power of the crowd is a phenomenal thing that's happening today. I agree with that 100%. And the one good thing, I don't know if you agree with this, Jason, but the one good thing I like about here is the crowd is doing it in a positive nature. The intent of why they're gathering is to follow a company that they believe in, knowing that the stake of their investment is going directly into the company. So this money is going directly in to funnel that growth, hire people, and become the company they wish to become. That's like, to me, that's, I left the public world because that didn't exist anymore. Here, it's real. Whether it's $50 a person invests or 100, I'd love to hear your comments on that, Jason.
Yeah, absolutely. Compliant. It's so important to follow the rules, and for so many reasons. The power of the crowd, yes, and that is certainly why I smile about this. But I'll tell you, I saw this happen with digital assets and in the cryptocurrency world, and there was all types of groups that were, talking very positively about alternative coins, and not all of those projects worked out, and it ended up working backwards for the industry for several years, where it was almost a bad word to say cryptocurrency. We're obviously seeing some of the blue chips. I think Bitcoin's over 52K today, and positive things around that. But that's one of the things I love about regulation crowdfunding is actually following these rules. And the expansions are occurring. March 15th, everything's growing. So, the same way, Oscar, you said, hey, whatever's happening over there, I say, and I'm kind of able to hide behind the wall on the marketing side of, make sure everything's compliant, make sure everything goes by legal. That's not what I'm licensed in. That's not my area of expertise. But I really love the topic of the power of the crowd. I saw some businesses early on where 3,000 investors of $300 each would raise 1.07 million for a local brewery or some type of small business. And the power behind that and of future patrons, let alone current customers, is very impactful. And I'm looking at these, $75 million potential Reg A pluses, and maybe a $375 million business, maybe a $1 billion organization that's selling a percentage of shares, and what it could look like to bring in much larger consumer bases through different funnels and consisting of social media. And another thing I wanted to point out was, we're talking about channels, and it's really a game of chess versus a game of checkers. It's not so much, hey, I'm going to put this one channel out there and the audience is going to convert. For the audiences at home, picture 7 touch points, picture 17. What is the prospective investor, be it retail or accredited, going to see first? What are they going to see second? What is the sales cycle? Is it 3 weeks? Is it 3 months? I wouldn't anticipate for it to be a day in first touch point. That will happen at times, but project conservatively and really define what that model looks like from the organic channels, from the paid channels, but with 7 or more touch points. How does the messaging change up? What do the visuals look like? Are there different types of influencers or publishers or anything to provide social proof and or endorsement? I think are all very, very important pieces of the puzzle.
Yeah, and there's something you said, and I'm going to come back to you on this one, Samson, because you touched on it as well, and I think it's important. So, social media is the vehicle that allows us to deliver it. Let's be clear that's what that is. It's delivery mechanism. It's like when people wonder why to get a pill or something FDA approved, it's because once they create the vaccine of something, now you need a delivery mechanism. It's not always a needle. It could be a pill that needs to get there, and that's what social media is. It's got all these different channels to it. Their delivery, but that social media element needs drivers to it, and you said it. And there some where customers have more money than VCs, but that's not the part that the fact that customers play a strong role alongside to that. I'd be interested to hear your comments on that, Samson, because I'm a strong believer that for the very first time, that's what you can do, is offer your customers an opportunity, and they become that first inner crowd that just drives everything even further to make those channels even more powerful. You're on mute, bud. He's on mute this time.
Yeah, I'm picking on the VCs because VCs have always crowdfunded. The general partners crowdfund from the LPs. It's just a much smaller crowd. And so when I say customers have more money than VCs, I'm always encouraging VCs to expand their customer base. And so with equity crowdfunding, already right now, it's approximately 70% of the investors into the $214 million that was raised in 2020, that came from accredited investors, that came from venture shops. So they're already part of the crowdfunding ecosystem. Customers, the average investment for crowdfunding deals of 2020 was $650. It's actually $653. But why that's important, because this goes back to how many eyeballs need to see this deal to convert. And this goes to your customer acquisition cost or your investor acquisition cost. And that's super important. There's a general consensus, until a human has heard something 7 times, they haven't heard it once. And so you do need to not only be on Twitter, Instagram, YouTube, but also your social network. And so this is sort of, what does the future of capital markets look like? Part of it is crowdfunding campaigns and crowdfunding platforms will help with your friends and family to help organize that round in the $250 to $500,000 raise, particularly given the new regulations that kick off March 15th. RegCF goes from 1 million to 5 million. Reg A Plus goes from 50 million to 75 million. That's going to be phenomenal because you're going to be able to take more of your customers, more of your audience, more of your community members, and offer them the opportunity to be investors. And this is where we call triangle financing. So this is sales, this is marketing, this is crowdfunding. You're already spending money on sales and marketing. You just got to, regardless of what good product you are. This other side of the triangle is branding. So you have sales and marketing and branding. You're spending money on sales and marketing to increase your brand, because when you have a great brand, it lowers your customer acquisition costs. This bottom part of the triangle, those are your investors. Remember, investors are customers who are also investors. You're spending money on sales and marketing to improve your brand. These investors, you're going to recruit them to your cap table. These customers, you're recruiting your customers to your cap table, because then something crazy happens. We haven't quite figured out what the number is, but maybe Jason knows. What's the lifetime value of an investor versus a customer versus a VC? And then things get really weird, because if your customer is also an investor, they're not only buying your good product or service, they're recruiting 2 people, 5 people, 10 people. And it really changes the lifetime value of that person who only invests $250 into your deal, because then as an investor, they've only the average investment was $650. as an investor, they've only put in $650, but they're still generating revenue from them, and they're bringing in more people. Jason, what do you think about that?
Yeah, I think it would really reflect the AOV, the average order value, as each customer could vary. We've worked with some B2B clients who their AOVs in the thousands, and they're becoming an ambassador, a referral partner after they've participated as a strategic investor in the round. So I think the metrics are going to change up. Also, the frequency of purchases, if it's the type of product that's bought once a year, once a week, once a month, all of that's going to come into effect as well. Definitely want to emphasize the social sharing element that you put in there, sharing with 2 people, sharing with 5 people, sharing with X amount more. That is really a massive marketing value that you get from these campaigns. Not just the visibility, but as you're bringing on investors, I try not to overstate this, but it's valid. You're bringing on these ambassadors, like the terms you're using here as well too. Want to incorporate those more into our conversations. But regardless of how you frame it, if I invest into a deal on one of these portals today, I'm not going to keep it to myself. This isn't the type of, fits into a portion of my portfolio that I would likely want to share it with some friends, some family, maybe golfing, later in the week. Hey, did you take a look at this? And I get those type of tips from my brother, from referral partners and clients that I'm close with. And that's what really happens, whether it's on the retail or credit investor level here. And the way you're stating it, with both for investment conversions and the customer conversions, and being an ambassador for both, being able to build a formula. I don't have one exactly built. And to tell you the truth, we tweak it a little bit in each of our strategies for the initial investment value. In many cases, we're seeing a second investment and then the social sharing. So then calculating how much that conversion is actually worth, and being able to use that as a metric to ramp up the ads, ramp up the marketing, be able to get to milestones quicker. We have not actually taken into account the customer purchase values, be it B2B or B2C. So maybe I could follow up with you on that. It's a really interesting model.
Because part of it, we danced around it, but we just forgot to say word of mouth. And a word of mouth referral it's worth its weight in gold, literally, because if someone refers you, one, you have greater confidence because, oh, Oscar referred me or Jason referred me. Particularly, like, whoever makes this mouse, these are great mices. This is a great mouse. So if I say this is the best mouse on the world, that's a word of mouth referral. It didn't cost this mouse company or your company any. And when you're paying for pay-per-click or pay-per-view, you definitely want those word of mouth referrals, because crowdfunding is really it is the slow process of converting social networking into social capital. And then there's all the business metrics that you benefit, where I love your good product or service. I love it so much, I'm going to invest in your business. And then when I'm playing golf or, having a beer, I'm telling everyone, oh yeah, I just put $1,000 into Jason's coffee company because it's the best coffee in the world.
So, I've been listening. It's good. I actually got to listen. Just joking. No. This discussion is interesting. It'd be, from a few years ago, we got AOV, we got all these terminology, we got the triangle going. I as you were talking, I go, okay, where's my book? So I wrote the book, Equity Crowdfunding, 11 years ago. 30 million copies were downloaded, and I wrote it in 3 languages. I gave it away for free, and I wrote a chapter in there that became a huge critique over the years, because when we first got all this started, nobody believed the crowd would come. That was one. You know how you say, build and they will come? A lot of people, even though we're touting Twitter and Facebook in those years, nobody really understood the power of it. And obviously now we got stats, Jason's producing that, and we're digging deeper and deeper into it. But there is a fundamental that, as you get into the triangle, making investors into customers and all that, for me, it comes down to, when you get it statistically like this, my only fear sometimes is that somebody go, okay, statistically, I just make every customer into an investor. I follow the funnel, the channel. They've lost the component of the passion, of the love that you need to have for this. And so there was a chapter I wrote, it's called Investors equals Customers equals Ambassadors. That was 7 or 8 years ago. And I was challenged on it at the time because the VC in the panel said to me, who in their right mind would ever want 5,000 shareholders? And the response that I provided was, well, interesting enough, you wouldn't invest in my company unless I brought you 5,000 customers. So it is interesting. So the question then becomes, it's really interesting, the dialogue that the company needs to have with this individual. The only component that they need to be reminded as well, that you treat them like a customers. I mean, I got examples of clients who've taken what I wrote, companies like Brewdog Breweries, look at them, they call them punks. You know, we call them gladiators at KoreConnex. We don't call them shareholders. They're our gladiators. They're part of our journey to empower what we're doing. But what's interesting about this, I do have somebody in my team who is a compliance person to remind me, Oscar is still a shareholder. See, I need you to understand. I want everybody to hear this because it's important. And so does Brewdog. Every company that we have, we make sure, listen, you put the right people out there. You put a Jason Fishman, Samson to drive that met, but don't forget, you still have a fiduciary duty. Do not forget that because a customer, your duty is not to lose their business. With investors, let's call it what it is. You have a fiduciary duty to them and the SEC and everybody else that do. But I do agree with you guys 100%. And so, the social media only works because the fear that I have sometimes is when people read this, okay, it's a numbers game. I remember when I first tell people, oh, great, I'm going to go to a company that can bring me followers. And obviously that's not going to work, right? Because they haven't bought into the brand. They haven't bought in. So can we talk a little bit about that part first? Because obviously that couples into the work you got to do, right, Jason? I mean, if the company it doesn't have a following, let's say they only got 100 here, 100 there, before they can do anything, you got to build that brand up with the crowd, right? It doesn't make sense buying it the old days, just buy it and put it there and they will come. I don't think that's there anymore. I just want to put that. There's a reason I'm doing that because it's coming up lately. Please.
Yeah, absolutely. And it actually reminds me of conversations I had back in 2015, pre-RegCF, about, and in rooms with VCs, different types of investment banks, different types of groups that were looking towards equity crowdfunding. Oscar, I imagine you could remember those waiting periods as well, too, before each of the regulations went into effect. But they basically consisted of whiteboards that said, hey, we're going to have a site, we're going to email some investors, 10% capital cost, month later, the round's closed. And I'm sitting there scratching my head saying, that's not really how digital marketing works. So I would be very surprised if that is what occurred. And I should note, I have seen that type of thing happen, few and far between, but I have seen RegCFs closed out in a week with very little marketing, Reg Ds in similar types of fashions. Obviously, there's a different variable because the accredited investor could come on at such a large level, but comparatively. It's actually, I'm going to go back to something Samson said earlier, where you need all of these audiences to get a small amount of engagement, a small amount of conversions, a small amount of traffic. I used to build out these algorithms, but just to give you an idea, if we're using real round numbers, 1,000 investors, $1,000 each, producing roughly 1.07 million. Rough numbers, and you can multiply that times 5 for a $5 million RegCF. To get 1,000 investors, you likely need 50,000 visitors, quality traffic at that, not just something you're buying and hey, it could be a bot, we don't know. Quality traffic and the right people. You probably need 50,000 of those prospects on that page to get 1,000 investments. That's a 2% conversion rate. Not to throw too many numbers out there or anything like that, but that's what Google defines as an average conversion rate, about 2.35%. To get 50,000 people to a website is tough. And definitely looking at the quality traffic there, it's actually a big tier separating business levels is around that 50,000 person level in a month, even if it's stretched out over a few months, you still get the idea. It's 50,000 people. it may require 1 million, several million, 5 million impressions, different audiences to see it, to produce 50,000 visitors, to produce the 1,000 investors. Now, that is somewhat conservative in many regards. That's not taking into account higher quality traffic, such as referral, such as peer-to-peer marketing, that is much warmer by the time it gets there. But I like painting that picture because it shows the funnel, and it shows you need a whole lot of people to produce a strong amount of traffic, to produce what could be looked at as a large pool of investors, but is really tiny. It's the tip of the iceberg when you look at all of the awareness that occurred. And that's what I really encourage brands to map out in their strategy and roll out in their campaigns versus, hey, just build it. And I love how I use that analogy because I've said that before. I've said, if you build it, they will come. Does not refer to equity crowdfunding. You really have to market. You really have to push it out there. I can give you a whole list of benefits that you get beyond just the capital from doing so, but that is the right lens. That's the right perspective to look at these campaigns with.
Yeah, that's a good summary, and something I'm going to come to you at, but I just want to make sure everybody's very clear on this. So if you buy that list or you buy those things, you're going to flesh it out really quickly that all that is just a bogus number. And the reason I say this, because we're going to see a brand new audience coming in into Regulation CF because it's being increased to 5 million. We're going to see a brand new audience to Reg A because it's been to 75. And what is that? A more established business that's saying, hey, I'm just kidding. I don't have a lot of social media. Just buy it. I hear you can buy a list for 50,000 people. Just get it on and that'll make it go. And I want to put that puppy to rest because you're not going to believe this. It's a question now that comes up frequently. I go, I don't know what social media company you're working, but it's not the one we're going to recommend for you. It's, Samson, you're an advocate of social media and all that, but I'd love to hear your comments on this because I don't think you can buy customers that way. If we could, we'd all be billionaires by now, but please.
I often tell everyone's a billionaire in Excel. So particularly dealing with startups, they're all billionaires in Excel. I'm like, guys, I'm not arguing with you over make-believe today, but I want to just bring to bear that you can't fake authenticity. And so that's part of because there's no magic formula for going viral. Rather, if there's a magic formula for going viral, it's you consistently put out messaging on a routine basis across multiple platforms for decades. And in the thing that goes viral, there is a specific call to action to go do X. Because if you just have something that 10 million people see, but there's no call to action to buy, invest, or click on your website or follow, well, then nothing comes of it. So you got to keep in mind, you can't fake authenticity. We smell it. Humans be like, they're full of crap, not going to work. And so because you can't fake authenticity, there's no easy way of, you have this giant listserv that you paid someone for qualified leads. That's not, your biggest hurdle is, I call it, who the F are you? And that's stranger danger. If someone doesn't know you, they're not going to talk to you, engage with you, much less buy or give you their money as an investor. You got to get over that who the F are you hurdle. That's the biggest thing. Because once you develop that rapport, this is where word of mouth come in. If Jason or Oscar, your friend, tells you, hey, you should go to so-and-so or check out so-and-so, now we no longer have stranger danger. Your conversion rate goes up exponentially if you're not worried about stranger danger. So just keep that in mind. On a practical terms, whoever creates your content should not be in charge of managing your campaign. I just want to say that out loud. Often you have a creative who creates the content and they're the same person who manages your social media campaign. That should not be the case. It never works out well in my experience. You should have two people who handle those things individually. And I do want to go back to, from the CFPA perspective, the crowdfunding professionals perspective, we're an advocacy group. We're based in DC. We harass the SEC and FINRA on behalf of not only issuers, business owners, startups, founders are called issuers because they're issuing shares, but also for investors and just the general public. And part of that, we're focused on March 15th. The RegCF rules go to 5 million. The Reg A+ rules go to 75. Those are the two big hanging fruits. but also as part of the changes, Oscar, you brought this up, where if you have 5,000 people on your cap table, many VCs are like, oh no, that's too much, I can't do it. Well, one of the changes that's happening on March 15th is called an SPV, which is a special purpose vehicle. I know it's not related to social media, but because of this SPV, you're going to be able to have 5, 10, 20, 30,000 people as one line item on your cap table when they do an SPV. That's going to be a big deal. So just keep in mind.
But I need to correct you on that. No, sorry, I need to correct you. You're correct, but I want to make sure the entrepreneur understands this is not a traditional SPV. What it is, it's an SPV vehicle that the company still manages. You still have the responsibility to the 30,000. What they did was clean up the cap table on there, but it still, the fiduciary duty lies there. And we're all working as an industry. I didn't mean to cut you off, Samson, but as an industry, lawyers at the funding portals, because they haven't given guidance, because an SPV normally has a nominee model to it. Mm-hmm. I don't want to get too deep into it, but nominee model, somebody who speaks for all the 30,000 holders or and all that. The SEC did not provide guidance on that. Typically on an SPV, there's a lead investor. There is no lead investor here. It's the company who created. So there's a little bit of ambiguity, but you're right. Once we flushed that out, just like we did in 2015, when we didn't know how we were going to put thousands of shareholders, now we do. We put them in safes, we put them in crowd safes, promissory notes, and stuff like that. We now know a way so we don't go over Rule 12G to put companies at risk. So, but I'm regardless of the instrument, regardless of all that, I think the bottom line that came from both of you over and over, we beat that dog over, and you have to, because, you know, guys, for the next 2-3 years, it's still an educational we're still there. We only touched 358,000 new investors. When you look at the market opportunities, 233 million Americans, and based on our statistics, 3.5% of the investors were not Americans. So that means we're even reaching outside of the United States coming in, which tells us that, you know, we're reaching a much larger audience, and therefore we're just scratching it. But to Jason and Samson's point, you know, when you go through this, it is more than just social media. You got to think about your strategy, whether you're B2B or B2C, to bring the crowd in, because if you don't do that, and if you just buy your way in, you're not going to get the results. That's been really my message. I don't know if you agree with that, Jason, but that's what I've been telling companies. Look, you're better off waiting a few months, hire a company to work with you, because they don't even, you know what I find interesting? Every company's got partners, customers, friends, associates, advisors, and a few shareholders already. But it never dawns on them to go to them first, to get them their first, you know, you go, how many people you got? I've got about 130, but it's not a lot. 130 times 10. Yeah, it's starting to look pretty good. He goes, how did you do that? Well, each of them are getting, so it's interesting. Do you know why that is? Because people still think shareholders sit here and customers sit there and I sit here. And that's how the public world works. And as soon as we do that, we're going to have the same chaotic problems they do. You started it, you said the word investor, investomer. That's your coin term there, investomer.
It's actually Sherwood Niece.
Sherwood
coined
Niece,
the term.
yeah.
I'm just stealing it from him.
Yeah, just stealing it, no problem. Investomer. So you were combining the two, so now they're together. Which is, I've always believed that as soon as you do that, you change the mentality. But because we've been trained on the public markets, that's the visibility everybody has. People put them in stands. So, so I do agree with the fact that social media only works with the right messaging components. And so let's touch a little bit about that for a moment. So it's more than social media. The social media is just a vehicle. So what part are you playing in this one, Jason, when you're guiding companies, guiding them when they don't have that voice? They don't know. Are you starting at that point, or are you waiting for them to have more established? I'm curious from your side.
Sure. So in terms of the voice, speaking to the messaging, yes, that should be in place. There should be consistency. This should feel like an organization that's going to continue growing and already valued at these different levels as displayed in their forums. So their messaging, their voice there, yes. In terms of their existing audience, we see the full.
Oh, I think Jason cut out.
All right, Thompson, get in, man, get in there.
Yeah, well, he'll come back because.
Well, but, I mean, you're with the CFPA, which I am. I'm supporting. Meaning, I believe that the industry needs a voice. We had it before. I'll come back to you, Jason. There is something going on in California right now. As you know, you're one of the states that they want to put a hack to it. At least that's what I saw. But the CFPA, are you providing a, I know you're an advocacy for the industry, but are you providing kind of learning tools for companies? Look at the subject matter. We could talk for hours. You know that, right?
Mm-hmm.
Because there's so many people go, oh, social media. I got a Twitter handle. I got all that. But you're listening to Jason. You need to have a message. You need to be consistent. You need to be able to reach that audience. Are you providing an overview for companies on that?
Yes. So if you visit, this is a shameless plug for the CFPA. If you visit cfpa.org, particularly in our video library, we not only have longer segments, but we have shorter, more concise segments that talk about this. Oscar, and what I'm going to do is, when I started talking about the SPVs, you brought up some excellent details, and I love it because it's great having people like yourself who are like, oh, you said a word, let me explain for the larger audience what this means. And so the CFPA, we're continuing rolling out new educational. One, we do advocacy for updating the 1933 Securities and Exchange Act, number one, as well as the Jobs Act. Two, we're rolling out new webinars that focus on some of the minutia from the perspective of investors, from the perspective of platform owners or portal owners, and then from the perspective of issuers, of people who are looking to use RegCF. There are some ambiguities, like some of the new rules that happened on March 15th for demo day and testing the water, much like the SPV. The SEC doesn't always give bright line rules like we'd like. So we have a legislative committee who are continuing to like, hey, can you provide us some clarity? Because we don't want platform operators to get in trouble. We don't want issuers to get in trouble, particularly in the use of social media. You can't use puffery, you can't exaggerate, you have to state facts. And so this is where the use of social media and compliance and regulatory compliance to the SEC gets very nuanced from time to time. So we provide those tools and resources so that people can understand what is crowdfunding, how could we potentially use it, and then check out the 60 plus FINRA approved platforms so they can pick whichever platform works best for them.
Yeah, I think the number's 78 now. Okay. Yeah, wow. So it's growing. Yeah, it's growing daily. It's up there. I know, Jason, are you able to get back in? We do have a question from one of the attendees here, so we're going to get to. But the interesting thing about social media is that when you are using it, this is my last plug. I'm giving Jason a plug. I'm giving it to those who are in the industry doing it. For companies that are looking to doing a RegCF, a Reg D, a Reg A, here's my only word of thing for you to know. Marketing is marketing. Investor acquisition is what this industry does. What that means, people like Jason Fishman at DNA provide a service understanding the regulatory framework. And what that means is that they'll know that when you want to say, oh, this is a multi-billion-dollar opportunity, say, I'm sorry, no, you shouldn't be doing that. Make sure you go get your lawyer. Where the other market, oh, I like that, man. That's punchy. Let's put it in. So punchy will get you exactly that. Samson will tell you, you'll get the knock SEC saying, well, show me that multi-billion-dollar opportunity, please. We want to see it. And you don't want to do that because the United States is the only country in the world that actually gives you a very pretty outfit. It's orange and it's pretty, so you may not want to have that. So it is important. I'm a big advocate. When I entered this, I love the professionalism that we're getting to. There is enough resources now for companies to understand. You can go to the CFPA.org. You can see it there. They should have a a directory. We have a directory. We do it as a company. We believe that its information should be available to you because we want you to have a healthy, crowdfunding. We don't want errors. We want the regulators to increase it from 5 to 10 and 75 to 150 million. I hope the SEC heard that. Yes, we want Reg A to 150. Please, 150 million, because that will bring another type of client that we've all been dreaming for. So, Jason, you got your internet back on there?
Yeah, I hardwired in. I don't know what happened there, but I caught most of what Samson said throughout the process.
Yeah, he came into the rescue for you. So look, at the end, this is a very lengthy discussion we can have hopefully for Samson. You met somebody. If there's any company right now that can give you statistics of what they have done, he's got it. He of all the firms that I've met, a lot of them say they have it, they don't. If you follow Jason on LinkedIn, you'll see it constantly. His firm is providing. Look, our objective at KoreConnects with our summits is educational, but this is educational data. Data is educational, meaning how many hits do you need? How many people you need to get back? How many people from the initial investment to the second investment to what Samson was saying, the word of mouth, 1 person to 10. That it's powerful. But you got to have a strategy, and you got to start with companies that actually know what they're doing, can help you with the messaging. We have somebody that's got a question. I'm going to bring him in. Aubrey, you have a question.
Hi, yeah, this is a question for Samson. I don't know if you have heard of Cindy Gallup. She's in marketing advertising out of New York. She's starting a company. She's on my LinkedIn, and every single day she laments the traditional VC barriers to entry. And so she's an older woman. She has started this, I think it's called Make Love, Not Porn. It's like it's a sex industry sort of product. So she talks about all these barriers. I'm not sure that she's familiar with crowdfunding. And I don't say that because of her age group or anything else, other than maybe somebody hasn't, and she's got something like 44,000 followers. I mean, this is a heavy hitter in the LinkedIn world. And it occurs to me, either this is her shtick, is not being able to find funding, or she just doesn't understand the route, any other non-traditional route. So Samson, do you think some of the things like regulatory frameworks and ICOs and crowdfunding and this counterculture to the traditional route, it's just maybe buried, or people just don't know about it, or it hasn't gotten, it's not gotten press like it should, I guess.
Well, the industry, the RegCF Title III of the Jobs Act, it turns 5 years old on May 15th, 2021. Happy birthday. And so part of it is, and Oscar said this before, it's awareness and education. If you're not aware of this, then you can't become informed and educated about it. So what I would encourage you to do is connect Cindy with me on LinkedIn if you could, and then we'll send her to the resources that we have on the Crowdfunding Professional Association, CFPA. And it's not just for her, it's for anyone who's looking for, if you can't get a bank loan, if you don't have a high network, and you don't know any VCs, well, then that fourth option is crowdfunding, equity crowdfunding, investment crowdfunding. And that's just a matter of,
I would actually say it should, you know what, I would put it, forget about just, it could be the first. There's nothing wrong with being the first. The thing with the crowdfunding, sometimes it becomes a stigma because people think it's the last resort of money. I don't think of it that way anymore. That's what it was in 2012. It's not. But I do agree with you. The one thing about crowdfunding, it doesn't exclude you. That's the better. To me, it includes minorities, Latinos, people, Black, Chinese, everyone. People love your passion to your business. We saw a coffee shop, a tea shop, led by a Black woman out of New York, Brooklyn, raised $1 million. What was that, in 90 days in a platform? I thought that was powerful. What was really, really cool, it all came from a certain district of where her restaurant is. To your point, Jason, It really is interesting. And regarding the comment with the lady that you were talking about, I saw her profile on LinkedIn. Do not be surprised, because you're not going to believe this, what I'm about to tell you. It's going to blow your mind. I got a call one day, not that long ago, from an accountant in Houston, Texas. And I'm getting yelled at because, excuse me, you're giving my client false advice about raising money. I said, I'm sorry, I don't do that. Well, he said that he can go out and raise $1 million from the crowd. That is illegal. I go, no, it's not. No, it is. If I said, look, at the SEC, if the SEC, I would have seen it. Okay. So I point him the director. When did this come out? 2012. So what I'm trying to tell you, Samson nailed it. We got to educate so many different people that it's there. It's possible for everyone, minorities, non-minorities, business owner, dry cleaning shop, flower shop, restaurant. Video game providers. It's not just for startups. It's not just for, for companies that are doing well. It's for everyone. That is what the intent of the Jobs Act is. If any of you have ever heard David Weil, he is the father of the Jobs Act. He is as passionate today about it as he was when he started it over 10, 12 years ago. And for him, job creation, bringing the ownership back to owners, democratization of capital, allowing everyday Americans to invest. And look what we've achieved in such a short period of time. People go, what are you talking about? It's been 11 years. That's a short period of time in the capital markets. So it is, isn't
Oscar,
it?
One thing I want to, because as we're wrapping up, we're coming at the top of the hour. We're talking about social media. When you go to build this online community, congratulations, you build an online community of 5, 10, 20,000 people. After the raise, you need to communicate with them often, still send them all your quarterly reports or your reporting that you must be done. You need to maintain that relationship. Don't put them in the dark, because they might help you with that first raise, and then you'll go back to them. Oscar mentioned Brewdogs. I want to say Brewdogs has raised somewhere around $96 million in total through their various raises, because they have a small army of 12,000 or so investors that they continually engage. So even after you're done raising money, you're down to the business of your business, you got to use your whatever social media platform to stay connected to your community.
Yeah,
and there's sayings.
Sorry,
I'm just
Jason,
gonna
please
add to that, because I'm seeing it even further down the line. There's sayings. Some of the portals encourage statements such as "always be raising." We're on our 4th round with one of our clients, 3rd round with another, both with 2 RegCFs, one with a Reg D, both on Reg A pluses. And, that audience is exactly like what you're saying there, Samson, part of the warm pool that you're engaging in the first part of that next round. So as the investor, I think you said, and being able to continue to engage them on, your marketing milestones, but beyond that to the next capital raise. I'm familiar with other groups that have 30,000 investors now, and they're in path to 1 million investors, and want to announce a project and be able to raise it an even more narrow point of time from there. And this is all just the beginning. I try to see where things are going to be in 5 years and 10 years. And it's really exciting to be a part of. I think every founder should be considering these different paths right now. As Oscar said, it's no longer, hey, I couldn't get capital, so I'm going to a crowdfunding route. Instead, hey, I'm pushing off these other options and going to the crowd.
Go to the crowd. Exactly. This is the option where you get Andrew Korn says it best. He goes, isn't it great to have 1,000 people who see the same view rather than just one? And then it's going to dictate terms. See, that's the way you can look at VC versus the crowd. Another element, I think we're talking both about the same company, Legion M. I can say it because they're really proud to have them on board. They're shooting for 1 million shareholders. 1 million privately held shareholders. Jeff and the team have done a phenomenal job. They're communicating with that crowd, constantly, right? And people don't invest just one time. Oh yeah, this is the boom, boom, 2nd, 3rd, 4th. They miss one, they get the next round. They're in round 7. And I think now they're going to start round 8. So it's pretty exciting. We got Forbes here who's got a question for us. There you go, Forbes, you're in. You got to unmute yourself there to speak. Give him a second there.
There we go. Can you hear me?
Yes, we can.
I interviewed a controller, he was a property controller. He was here in Canada, and he was working for a Chinese company who basically was selling land to Chinese investors. And he was responsible for compliance and investor relations and reporting. But what was really interesting is that they were selling the land in 1 square meters, and they had over 10,000 participants in that particular deal. So it was. So I'm just kind of curious about Chinese platforms, social media platforms, and whether or not what you're discussing has an application to market. And am I restricted in Canada, or under these structures, or can I use these structures in Canada, or do I need to locate the state?
So I'll venture to answer this question. Canada has, I want to say they have 13 different provinces, and each one handles crowdfunding slightly different. And so it really depends on what province you're at. And I do think that when it comes to the company who's selling 1 square meters, 3 by 3 feet squares worth of land, I think I would be cautious of that, because it seems like an artful way of avoiding regulations. It might be legal in the sense you're selling 9 square feet, but I don't know if it would pass a smell test.
It's yeah. I'll slip in here, Samson. You probably didn't know this. I'm Canadian.
Oh, awesome.
I let it out of the box. It came out. Okay, everybody knows now. I came out. Okay, it's official. February the 17th, 18th, I came out of college. I'm Canadian, yes. So Forbes, your answer to your question is, I'll start first. Canadian securities law allows you, depending on what province to go to create a subco. In the United States, to use regulation CF, you got to be really careful how you do it. You do need to engage with a US lawyer in order to make sure that the structure is correctly. But keep this in the back of your mind, is that if you do choose to use RegCF and you are a Canadian company, which you can, and then later on you decide to do a Reg A, you will not be allowed to do a Reg A. So like anything else, we're going to have a webinar on structuring for foreign companies, foreign countries, where regulation CF was only intended for US-based companies, but it doesn't mean that you cannot port yourself here, but there is a consequence to Canadian companies in particular. Now, answering your question regarding Chinese platforms, you have to be careful. The securities laws in China prohibit the sale of foreign securities to their nationals without the Securities Commission in China. I do know people use platforms like WeChat and others to do that. How that individual comes to the platform to invest is another question. All these things, look, social media brings up a lot of different models, and people say, oh yeah, it's legal, it gets online. Not always. So please be careful. Samson is correct as well that in Canada, we have 13 different provinces. Therefore, it causes a lot of headache where you can go. One of the leading online crowdfunding platforms there is FundFounder, Peter Paul can help you there. They can help you depending what province. You can raise up to 250,000, and that's in Canada only. But obviously, to use this exemption, it requires a different strategy. You can reach out to us. We'll put you in touch with the lawyers that you need to. The good thing is we no longer have to wonder who to go to and all that. We know the go-to people now. They're there. We're so much further ahead than we were in 2015. So much further. We have an association. We have trained professionals with the investor acquisition. We have the lawyers. We have the auditors. We have the funding portals. All the resources are there for you in order to make it go forward. And as you can hear, my little one, he's saying he's ready to go as well. So listen, we could talk for hours. Thank you, everyone, for a wonderful afternoon. Samson, you and I are going to chit chat again. Jason, as always, thank you for making the time and for your support for both of you. Have a wonderful afternoon, everyone. We'll talk.